And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Wednesday, September the 8th, 2021. We continued to move lower today, but it was very quick in both directions. But by the end of the day, I believe that the market has made pretty clear what's been going on since we reached the high at 4549.50. Now, we know that we were trying to trace out a minute fourth wave correction, but every time I thought I could count ABC, it fooled me and started to go again. Well, now that I've let more of the chart to be rolled out, I have been able to put some labeling on here. So let me go over that. Again, we have been tracking a minute fourth wave, a minute third wave completed at 4549.50. And then we started to count what we always are going to be looking for within a corrective wave, an ABC. Of course, we got the A wave down, then we got a 3 waves up, that was wave B. Then we've got 5 waves down, and that was wave C. Then it threw in this triangle. And it's an A, B, C, D, E. And that formed an X wave. Now, under Elliott, this is an observation that Elliott made, but the X wave is always going to be 3-wave structure, but it's any combination of those 3 waves. So a triangle is a combination of 5 3-wave structures. 1, 2, 3, 4, 5. And then it thrusts out of the triangle upon its completion, back in the direction of the larger move that's in order. And that, of course, is corrective, and so it's counter trend. So it went counter trend. And then we formed an additional A, B, C. And because of down here, it could have been like, okay, that finishes the C wave, and now we're just going to keep going, but that didn't happen. They stopped. They went up, and then they smacked it again this morning. And so taking a step back, now I can see that it was an ABC, a double ABC. Now, when we say double ABC, it's always going to be separated by that X wave. So we have the first ABC, then we have the X wave, and then we have a second ABC. And I'm going to put the 4 here. Now, I'm not getting any heavy duty signals from the market that this is the start of a minute 5th wave advance. I'm not getting those yet, but I am going to put the 4 down here with the understanding, as I always will say, the market is always going to tell us. And so I have to allow it to tell me. And this marker may be moved because it always can flip and put itself through a triple ABC. But right now, I'm thinking we got 1, we got a 2, and then we're off in a 3, maybe a little 4, and we get up here, and let's get a 5 waves up on the hourly chart to give us some strength or some support to this minute 4th wave being complete and the start of the next minute 5th wave advance. So let me pull this chart back open again. Actually, I can do that right here. And so what I want to do, that's not going to work, okay. 4-hour chart up and then move back to the hourly. What I want to do is now add that last leg, because right now we have our resistance levels via Fibonacci extensions for minor wave 5 and then intermediate wave 5, which is the outside. Minor wave 5 is the next one in. And now I'm going to put them up for minute 5. That's going to be based on this low staying in place to complete that minute 4. So that's the only caveat to actually doing this right now. But I want to start looking at what our possibilities are for upside moves from here. So we go from the bottom of wave 2. Nope, that's not what I wanted. I thought I had a already put it on there, but I guess I didn't. Bottom of 2 to the top of wave 3. Come on. Thank you. To the bottom of wave 4, which was today. And we did drop below 4,500, but we had support right there at 92. I think it drifted just below 92, if I'm not mistaken. And no, the low is 92. And that actually was support. And then we had additional support down at 82, first at 44.86 and then 82, if that broke. It didn't, it held and it rallied quite nicely. But again, we now have to wait until tomorrow to actually see if that's going to be the case. Okay, so, but if it is, and that marks 4, let's take a look at where we can go in a 5th wave. So the first real marker for me is going to be where minor wave 5 would be equal in length to minor wave 3, and that comes in at 45.71. Now, where do we get any overlap from minute wave 5? Well, we sort of get it above and below. So we can build a little bit of a zone, a resistance zone from 45.60 and then 71 and then 81. And that would be a zone that could complete minute wave 5, minor wave 5, and in turn intermediate wave 5, and in turn primary wave 5, cycle wave 5, etc. We have quite a few levels that we are completing. But I'm going to continue to move up because the most common relationship between the 5th wave and the 3rd wave on a Fibonacci basis is that that 5th wave will be approximately 62% times the length of the 3rd. Now that number for minute 5 comes in at 46.02, I'm going to call it, we'll round it up. And then we have additional. Minor wave 5 could extend, which it already has, and that would kind of boost it to get itself up to 1.236 times the length of minor 3. And we've already gone back and we've checked that minor 3 is not the shortest wave. Minor 1 is. So we have enough space where we can expect and look at possible extensions for minor wave 5. Again, the minute 3 gave a really good extension. Minute 5, I am anticipating that once it gets going, it should also extend. So that extension comes out at 46.24. But the zone, right, when we add minute 5, comes from 46.17 to 46.31. So that continues to be the zone. But I actually need to extend it now to include the 0.618, 0.75, 0.705, and then 0.786, plus the 1.236 for minor wave 5. Now, lastly, we can continue to go up where minute wave 5 would be equal in length to minute wave 3, and that is at 4,669.50, so we'll call it 70. And also within there, we have where intermediate wave 5 would be equal to 38.2% of intermediate wave 3. And that comes in at 46.74. Then minor wave 5 would equal 1.382 times the length of minor 3, which is very common on an extended wave. And that comes in at 46.56. So our zones, while we have them down here, really sit right here. And this one has a lot of strength as well to be completion points. If this thing really gets going, then of course we have additional levels all the way up here. Excuse me, but this is where it starts to get pretty extended, and I'd really have to take a look at it to see what is going on and maybe make adjustments. But right now, I don't feel the need to do that. So what can we expect for tomorrow? Again, kind of a slow week. Tomorrow we do have, I think, unemployment figures. for the prior week. And I think that's about it. And then we have, I believe, some inflation data coming out on Friday. So we do have some market moving numbers that could push the market in either direction. Right now, they're tending to be more negative on the market, but could just produce an extended fourth wave, because here is where it can't break. It still remains down at 4,414. And this could actually get itself down into here, which would be a fourth wave of one lesser degree. We have this correction here as well, but it starts to extend below. So that pulls us right now, it already is into the price territory of that fourth wave of one lesser degree. So it could be enough. But if it does roll over and turns into a triple ABC, well, then we're probably looking for 82 with the possibility down to 62. So there's still some potential for some downside, and it could get pretty serious. It could get drop the market at least another 40, 50 points from where we are, and still be in shape to go and do the minute fifth wave to complete the whole cycles. So, but if this holds and we continue to now march higher, then I'd be looking for it to start to break back above the 200-day, the 50, which is above, and to get things back lined up for that intensive rally that we would need to see. And this one is just off by a tad. The high is 49. Let me see what I ended up getting. I'm a stickler for having pretty exact, because of every bit counts, and it shifts, can shift a number around a little bit. And I'd be looking for it to start to at least get to 45.34 and then onward. Now, eventually, if it is truly going to be that minute fifth wave, it is going to have to break that high at 45.49. But what I am encouraged by is the fact that the market does stay above, or as it drifts below 4,500, it regains that level and ends up closing above it. Now, we've seen that twice. Last night during the Globex, but then it brought it back up for our opening, then it dropped back down below, but then we brought it back up to close above that. That continues to favor a continuation to the upside. So we have our downside, and it should, again, if it's really going to fall from here, I think it can go very quickly, just like it has 1, 2, 3 days in a row. So I don't really have anything else to add other than it is very, very important to continue to trade what's in front of us and not necessarily worry about the who, what, where, when, or why that the market is doing what it's doing. What are they attacking? Why are they selling? It doesn't really make any difference to making your trading decisions, because as day traders, we just trade what's in front of us. And we will get surely enough advance notice that things are breaking down, because we will trade according to our moving averages. And when the moving averages start to break down on the hourly basis, and then maybe on the daily basis, then that really is showing us that we have some market weakness. Now, the S&P right now remains below the 200-day moving average. That's that kind of chartreuse or pink line right there at 45.16, 45.17. We got above and below it a couple of times today. If it can hold that line below, then I really would be more negative and be looking for downside. But to move back above and then above the 50, which sits at right at 45.20, those lend a lot of support to the rally being back in control. But the buyers are back in control of the market. And we'll wait and see. So that's where I'm going to leave this. And our next update is tomorrow, Thursday, September the 9th.